Nebraska Extension livestock economist Kate Brooks is our cattle market analyst this week. The price for all fresh retail beef reached a new record in July, averaging $6.16 per pound. Ground beef, however, fell 2 cents from the previous month to average $4.20 a pound. July's cattle on feed report showed placements and marketings were the lowest for that month since the data series began in 1996, and the agency's cold storage report showed a sizable increase from a year ago. We talked with Kate at the Goodmanson Sandhills Lab open house Wednesday near Whitman and started by looking at current price levels.
You know, as we've go back the whole entire year, if we look at prices throughout 2015, we started really strong there above 2014 levels. As we've come through August, we're starting to hit those 2014 levels where they continue to rise, and we're not seeing those increases here in 15. Maybe actually start to see some declines as we continue through August and even into September, October.
Reasoning behind that?
There's a lot of things going on. We're going to start to see more calves coming into the market. Part of that's just because we are rebuilding the herd, starting to see more calves hit the ground. Probably not as many this year as we will see next year, but there's also some macroeconomic issues going on as well. But just overall starting to go back to that normal seasonal price cycle.
Let's take a look at some of last week's report. First of all, cattle on feed, record low placements and marketings for the month of July. What does that mean?
We've continued to see cattle numbers to continue to decline. It's just another scenario in it all. As we look at marketings, we're bringing cattle in at higher placement weights, and so we're holding those longer, so that's delaying some of those marketings. But we're also just, in the industry as a whole, we're delaying a lot of those calves coming into the cattle on feed report as we're delaying them going into the feedlots, trying to, keep them out on pastures or add weight outside of the feedlot.
One of the things you talked about today was beef cow replacements and trying to build up the cow herd. Outline for me where that is and where that goes for the rest of the year and even into 2016.
Right, so we've continued to build the herd. As we looked at the January 1 inventory report, we saw increases in cow numbers, we saw increases in replacement numbers. If we look at statewide, we saw big increases in Oklahoma and Texas. As we move to the July 1 report, we don't get it state by state, but as a U.S. as a whole, we saw increases in the cow numbers again. It just reaffirmed that January 1 report that we are rebuilding. We saw the third highest replacement heifer number year over year for the last, since early 1990s.
That holds, though. You believe that it will continue? There's nothing alarming that would say, no, it's not going to?
No, we still have a lot of profitability potential for cow-calf herds. That brings about a lot of opportunity to continue to expand these herds. We've got pasture, we have hay, so all of that brings into good weather conditions to continue to see expansion in the next couple of years.
Let's talk about demand. So last week's cold storage report showed beef in freezers up 24% over a year ago. How alarming is that?
There's a lot of things going on in cold storage, and we're seeing a lot of increases in cold storage numbers. Some of that's because of declines in our export markets. We're also holding calves to a little bit heavier weights, so that's increasing beef production this year over last year. So there's a lot of factors going on. The big thing with the export side is if we're not exporting it, then we've got to absorb that product here in the U.S.
And are the consumers willing to do that?
Well, that's the question. The big thing will be, as we increase supplies here in the U.S., prices will eventually go down for the consumer, or at least stabilize for a while.
How do the competing meats, chicken and pork, play into that game as well?
That's all a big factor. As we look at beef in general, we don't eat beef as often as we used to. As prices continue to go up, some consumers weren't willing to switch away from beef if they were only eating it once a week, once a month, depending on what it was. So they were still eating pork and chicken, but we didn't see a lot of that substitution away from those high beef prices. But as we continue to see increases in production in chicken and pork, again, more supplies in the U.S. means cheaper meat prices.
All right, so foreign demand, let's talk about that. And you mentioned exports. What do you expect for the strength of the dollar and therefore how that will impact exports?
Right, so we've seen the U.S. dollar continuing to strengthen, higher beef prices. So for beef industry, we've seen, some pullback a little bit on the export market, not being able to export just because it becomes more and more expensive for those countries. And then, if they're devaluing their currency as well as we're seeing some countries do, that also offsets, some of that export market availability.
Let's look at margins as we close out. First, tell me where margins you think will be in this area for cow-calf producers.
Where exactly the margins will be for cow-calf producers, the LMIC is predicting, on average in the U.S., somewhere around that $480, $490 per head returns. There's a lot of strength here in Nebraska. We have a little bit higher calf prices, so there's potential there for those returns here in Nebraska as well.
Flip side in the feedlot?
The margins are a lot tighter on the feedlot side. So, as we go forward, the margins there, we're placing cattle a lot heavier weights, so trying to put some cheap feed into them and get them to heavier weights, the margin's not there like it was for sure in 2014.